I really appreciate, first of all, the ReSource Pro team that's planned this event. Hasn't it been fantastic these last few days? It's my first summit myself, and I'm really have enjoyed this, and it's great to be with all of you. We're going to take a few minutes here and just talk about premium leakage and some of our data issues, or data issues, however you want to call it. We can call it good data and bad data. But as we talk about this, it's been interesting for me as we've had discussions and as we've talked with others about this premium leakage. I remember the first time as I started thinking about it, I knew it was an issue. But all of a sudden there became even more and more holes that we've discovered. And we hope that this will be an opportunity for all of us to even discover more areas that we can plug. So talking about premium leakage, sometimes it's misclassification. And I would submit that for the next 45 minutes, us four might be misclassified because we're going to be plumbers for the next few minutes. But to help frame this, first of all, we have a great representation here with Matt Zender with AmTrust, Jason Fox with CopperPoint, and Dana Blouse with Builders. But they each come from a different perspective. So Dana, maybe if you just kind of briefly introduce yourself and your background and what perspective you're coming from, and then Jason and Matt, please.
Yeah, thanks. Well, I'm happy to be here, and I've learned a lot just preparing for this presentation and how important what we're going to talk about really is to the profitability of the company. But I've been in loss control for, I think it's about 36 years now. Been with some major carriers. Decided to end my tour right here at Builders with probably the most difficult thing to loss control, and that is residential contractors. And so that's what my focus is on and right now in running the loss control department for Builders Insurance.
Yeah, I've been in premium audit for 20 years, the dark side of premium audit. So we're kind of like the checks and balances to ensure policies, we're collecting the right premium for the right risk. I swear premium leakage has probably been a point of discussion ever since I've been in the industry, Fred. But, premium audit, we really come from a perspective of making sure that our underwriting and our broker partners and our policyholders are really educated on the classification system and how their policies are classified, how their risks are classified, and actually what that does for them, right? They think audit's bad, but audit's not really good. And when we have the opportunity to educate them, they're very receptive towards it.
Audit's always good as long as you just leave that policy alone, right, Jason?
Yeah.
Yeah, that's right.
So, and I'm Matt Zender. I'm with AmTrust, and I come at this subject from perhaps a broader perspective. So I manage the work comp line of business. So I get to work with our colleagues in their respective areas and get influenced by their impact. So we work with audit and loss control and underwriting and sales and all the different areas and work on our portfolio management. So when I'm thinking about premium leakage, I'm thinking about it from all of the component parts and how they sort of impact our area.
Matt, that's actually a perfect way to kind of help frame this, because I appreciate you mentioning that. And that's why I like having this perspective from an underwriting loss control perspective to premium audit to the whole, from an agent's perspective to MGAs, as they play a big role with all of this. And so maybe to help frame this, first of all, before I get into this first question, I need you to visualize for me. We had a master class on Tuesday that Dan Swenson and Selena Lau from our companies we taught. We dove deeper in premium leakage, but they had a great graphic, and I wish I'd had it up here, but I'll try to paint the picture. But think of this bucket that's full of water with hundreds of holes in it. So you can picture that bucket with hundreds of holes in it. You got water squirting everywhere, right? So there's holes, H-O-L-E-S. The whole purpose of being plumbers here to seal those up is to make us whole with a W-H-O-L-E. And in order for that to be whole, it goes right from the agent right back through the end of underwriting to premium audit to billing that out, making sure that we can seal all those leaks. And it's amazing how many they are. In fact, it's estimated that it's over $30 billion annually in premium leakage, on top of another $40 billion in premium fraud, which I don't know why they don't consider premium fraud part of leakage, but so 40 plus 30 is calling what's close to 70 billion, right? Yeah, so you deal with numbers, so I want to make sure I was right. But I mean, that's an enormous amount that's just estimated in leakage. So maybe if I could ask you, Matt, what are some of the leakages that have impacted your business that you've seen at AmTrust or in other insurance lives?
Yeah, sure. A number of different examples come to mind, but I mentioned that I think about it more broadly. So from my perspective, I think of premium leakage, it's really just a data point to me. I mean, premium leakage equals bad data, equals flawed data, equals, in many cases, unusable data. And so it could manifest itself in a fine for an underwriter who, released or backdated a policy, and now all of a sudden we're getting a POC fine that in some states can be considerable, and the underwriter maybe didn't even realize what they were doing. To me, that's a data point. It could be a claim that gets accepted because somebody didn't put the proper endorsement on the policy. Well, now the data that's within that policy is flawed and has an impact there. It could be a return premium that you have to do at an audit because the classifications weren't right when it was originally written, or it wasn't right when the auditor was going through it. That represents flawed data, and so it has both upstream and downstream impacts, and it just affects your ability to use that data. The workers' compensation line of business over the last 15 years has had an unprecedented period of profitability. I mean, we are not used as a work comp line of business to producing underwriting profit. If you go back 100 years, it just wasn't something that happened. It now happens routinely year over year. So it starts to put some pressure on sort of the gray, if you will. And the better you can manage the data elements that are manifesting through these errors or leakage, the better you'll be able to price your business profitably and competitively, right? And so it's a 360 view. It impacts across the entire spectrum.
The fear of that I was just thinking about with that, even though it's profitable, all of a sudden it can tend to create opportunities to even create more leaks, right?
Sure. Motivations are there for sure.
Yeah. Jason, I liked when you mentioned that premium leakage has been around for the 20 years you've been in your career. Do you remember one of those first times you encountered something like that? And I invite you, Dana and Matt, to interrupt or add things as things are brought up. So, Jason?
Yeah, probably the first one I can remember, because premium leakage, right? Matt makes a good point. Premium leakage just may not just only impact your organization, but it also impacts the policyholder. It also impacts the agent. It impacts the industry as a whole, from premium audit, how I see it, because ultimately for premium audit, right, we're one of our main focuses is to really focus on reporting accurate unit statistical data to all the insurance regulators, right? Because what they do with that is they make rate. And so it's just this dovetail, right? You misclassify the risk, you report bad data to the bureaus, and then the bureaus really never issue maybe what the rate should really be based on what the data should be reported as. So I would say probably one of the first ones I remember is this is when I was in the field, and I went and did an audit, and we have a saying in premium audit, right? Audit the risk, not the policy. We should never be auditing the policy. Whatever class codes are on the policy, it's a good point of reference for us. But we really, during the audit process, we dig deeper, right? We dig, what are the operations? Are there multiple operations going on? How are those operations? How should those operations be classified? So from the policyholder's point of view, they really see it as just the bottom line. What's my premium going to be bottom line, right? So there was an audit I did, and this was new in my career, so I hadn't really.
It was the bottom line because they didn't want you messing with the policy.
No, they didn't, right? Yeah. In this particular situation, they basically explained the operations, just how the policy was written, and it was a lower rated classification code that they were using, so the premiums were right where they really wanted it to be. So, unit stats are filed. All of a sudden, once their experience modification, and experience modification also has to do with premium leakage too, right? Because it can impact the way an underwriter writes a policy by applying scheduled debits and credits and et cetera. So months later, after they got their experience modification promulgated, they noticed that there was like a 29% increase. What does that do? Well, they're in the construction industry, and when they're bidding on jobs, and it could be the owner of a project or a GC, a general contractor, and they may put tolerance levels on that experience mod, right, and say, no, your experience mod is 130. We're not hiring you. We're not even going to look at your bid. So months later, get a call. Yeah, Jason, I think our operations are classified wrong. In fact, the person you were talking to really doesn't know our operations, so I'd like to talk to you about our operations again. So the more I took a deeper dive into it, I said, yeah, you guys are actually classified incorrectly based on what you're telling me now, like what it is. So that's not only premium leakage from the point of what their premium is, but it's also the experience modification. And by changing those unit stats to revise it, it actually impacts that industry rate, the rate for that particular industry, which also impacts all these other policyholders across the country that actually are classified under that same code too with that rate. So it impacts them as well.
You just opened a can of worms right here, Jason, because all of a sudden about 4 or 5 different holes just popped out in the bucket for me that I want to address. And one of them is going to be underwriting and loss control. So Dane, I want to get to that. But before I get to that, we talk about the unit stat reporting and how that really impacts not only you at CopperPoint, but how it impacts the industry as a whole. Matt, maybe you can talk on that a little bit more on how you've seen that or how you can see it. I know your experience in California with the Workers' Comp Insurance Rating Bureau can relate to that, but it's a nationwide impact.
It's definitely nationwide. So in California, I sit on the classification rating committee, so I get to see sort of the manifestation of the data as it rolls through different carriers and as we report out on who's doing what. In the last presentation, Ms. Stewart was talking about her experience with that and some of her report cards that she had. So we've seen across the spectrum with that. A practical example of what you're referring to happened a few years ago. There was a company that we had acquired, and we didn't realize this in the due diligence, but their data was basically unusable. And so we had to do essentially, like what was talked about in the last session, a forensic recreation of each of the policies back to inception, which was months of work just to get our data to be usable by the regulator. The acquired company was smaller. It was still a couple thousand policies, but it would have affected our position within the state, because they would have invalidated, and we had a pretty big position in that state. So it can be extremely powerful if all of a sudden the regulator's like, you're being excluded from the rate making process.
Yeah, that's huge.
And we can't have that. And so we had to go back and spend hundreds of hours just basically forensically recreating each policy. And it would have been dozens of hours of work on the front end, right? But it was hundreds of hours of recreation.
So this is the second example I've heard in the last hour of forensically having to go back and redo a book like we heard with MIS just in the previous presentation. So that's amazing. And then I just want to paint this picture for all of us when we talk about this data issue. We've heard enough about AI, not enough, we've heard a ton about AI these last 2 days, but none of the AI is worth anything if we don't have good data. And it's that right there with this unit stat reporting is critical. I immediately was thinking, Jason, when that policyholder called you back, said, hey, we're actually, you talked to the wrong guy, you know, we're actually this. Dana, do you know how that could have been prevented with the type of work that you're over?
Yeah, I think probably the most important thing we do in loss control is to get a good, clear description of what it is that either the prospect or the insured is doing, and not only in the present, but what are their anticipated changes coming up. You know, and in construction that can be quite a change. You know, they could go from being a framer to getting into roofing, whole different operation. But getting that clear data, and we use vendors primarily to do our loss control surveys. And so it's real important to interact with the vendor to make sure that we're getting the answers that we need. Now, the problems you run into is the way we ask the questions, I believe, sometimes, you know, when we're out there. And, you know, if somebody doesn't want to come forth and you're asking a very simple question, you know, yes or no, they can just jump out and give you an answer, and it's not going to tell you a lot. So what we're trying to do now is to come up with a way to make the questions a little bit more probing, a little bit more open-ended, so that they're going to have to come forth with a little more data. For an example, you know, in many of our customers, the most dangerous thing they do is drive a vehicle. And with contractors, we may ask them, do you have a fleet? Tell me about your fleet. Well, in their mind, they're thinking of fleet as like this big delivery fleet. And they say, no, we don't have any fleet. Might say no, and that box is checked. In reality, there may be a lot of people out there that are using their own vehicles. Or there's a couple of vehicles, but a lot of people are using them, which then leads to how well are we screening them, and how well does this customer or potential customer, do they know how to manage their risk when they're out there? So we need to get that data so that the underwriter knows to use that. An example not too long ago that came up was we had a contractor out of state, and it had come through that they were doing some roof repairs. I think the question was probably asked, do you do roof repairs? Yeah, we do some roof repairs. We can accept a little bit of that, you know, in the home building process, but we do not like to write roofers. So I went and spent the day with them, you know, and you gain their confidence after a while, and maybe you're not talking to the owner. Maybe the owner's been, you know, prepped for what the insurance company might ask, but I'm out with a superintendent and I'm asking him about, you know, the roofing, and I say, you know, you guys do a great job and you talk about doing everything, but who does your roofing? He said, oh, we do it all. We do all the roofing. In fact, we do some for other folks too. So that was something that we were going to take on a lot of exposure, and we wouldn't even have getting the premium for that, which is a huge leak. And so I think just loss control, getting a good, clear description of the operation can plug a big pile. We probably have one of the bigger holes, I think, in that bucket that we can plug up. You know, we can stick our thumb in the dike just with a good description of operations. So we ask to get a good description of operations, but we also ask, what's your opinion of the risk? We really want to know, if you're face-to-face with somebody, do you think that do they understand the hazards and how to properly control those hazards?
Yeah, I think of that. Thank you, Dana. And you talk about the underwriting report, or loss control report. I'm thinking, Jason, back to that audit, when that insured called you back, if you had and you probably did, but maybe not, if you had an underwriting report to your fingertips, what would that have done for you?
Oh, yeah. So I think that was early on. So, and, you know, as I progressed and continued in my career,
I'm not incriminating you by any means here.
No,
I'm just saying,
no, but
it's turning on the light,
yeah.
you know, of how we can
But
connect.
like, I eventually really advocated for reading those loss control reports, right?
Yeah.
You know, Audit has a pre-audit process. Well, probably should have a pre-audit process, in my opinion. And part of that pre-audit process is going in to see if there is a loss control report, reading the loss control report, because in most cases, there's really good information in that loss control report that helps us. And Dana brought up a good point, right, about the open-ended questions, because when you think of open-ended questions, you think of auditing the risk and not the policy, right?
Yeah.
Instead of, oh, so you do carpentry? Yeah. Okay, the right code. Instead of asking, what do you do? Like, what type of carpentry work do you do? Do you do interior? Do you do exterior? Framing? So that piece of that loss control report really helps audit ask the right questions during that interview process to ensure that we have the right classification codes in place.
You know, I think brings up how important it is that there's collaboration between underwriting, premium audit, sales. There's, you know, we know the life of a cycle. It all begins with the agent, and it ends with the agent. And I was at the Veris conference 2 weeks ago, and one of my takeaways from that conference was, how do we qualify our agents? Because there are some really good agents out there, and there's others that are still in a learning experience. And we know those that are in a learning experience and those that aren't. But can any of you comment like on how do you collaborate from your sales to underwriting and audit department to maybe even address like the similar issue we were just talking about? Do you have any ideas, any of you, on that?
Yeah, I would say, you know, it could be a very delicate matter at audit, right? Especially if audit goes in after the policy's expired, and, you know, if the policy's written on a $100,000 premium policy and audit goes in and now it's $300,000, right? I think the collaboration piece is really, if we, there could be multiple reasons why that additional premium developed. It could be misclassification. It could be that they did have the right codes on the right policy, but it's reallocation of exposure to the right code from a lower rated code to a higher rated code. And I think that piece is where the collaboration comes into play, where audit, we like to have discussions with underwriting, because what we're doing is we're providing information to our underwriting business partners, right? Where we want them to know, hey, this is what our findings are, and this is the premium it generated. Do you want to go back to the broker and kind of discuss those results before audit releases a bill out to them, and all of a sudden it's, you know,
Before hell rains upon them.
that's
right?
exactly right.
Yeah.
So I think that piece is like, Matt, like with, you know, Matt's in work comp line of business, like I think that helps put some white gloves on and kind of almost mitigates it, but not really, because there's still the, you know, policyholders still getting a couple $100,000 bills.
Well, there's a number of people who are touching this throughout the process, right? From the salesperson to the distribution to the underwriter to, you know, all throughout the continuum. And every one of those people, including the policyholder, have their own perspective on what should or shouldn't happen. Each of those perspectives are influenced by how much they know. I think we've talked a lot over the last couple of days about how we can augment that experience through things like AI and standardize certain sort of more rote elements of what could or couldn't be understood. Many of these are just rules, right? They're rules that can be automated. They're rules that can be understood. I was looking, I'm going to open up my notebook here for a second. I was looking at some of the top misclassed codes, for example, in 23, just to kind of get some sense as to, you know, how this works. And I sort of put it on a spectrum of whether it would be hard or not hard to maybe anticipate that. And I'm just going to go through them quickly here. But number one, the number one rated misclassed code was 60% of those that were reviewed, which was misclassed, was 8292 storage warehouse. And that should have been 8018 wholesale. And that's basically because 8018 would be an NOC on that. And so the employees would fall under it. Number two, the number two most misclassed code was 8723 insurance companies. So, we've seen the enemy, and it is us. I mean, they should have been 8810 or 8742, or vice versa. Rather,
Or-
they put
or-
it in 8810, 8742.
Or
It should have been
plumbers too, once in a while, right?
plumbers,
So-
and you go down the list, and even the number 10 misclassed code, which is carpentry. You're mentioning carpentry before, and understanding the nature of operations. In this case, they classified it as carpentry 5437, and it should have been 5645, which would be residential less than 3 stories. And that's 25% of the time that's misclassed. So I think that kind of gives a sense as to, the order of magnitude of the problem. I think when you look at how many times, now it's a skewed sample. These are NCCI misclassifications, and their whole model is designed to find the exceptions. So they're if you have something that stacks up weird from a class code perspective, they're going to look at that, right? But it still represents how often these are misclassed, and if we're getting those wrong, imagine
how many others.
Right.
I think it just reinforces, and this is one of those leaks I didn't really look at until we dove into this more, how important that unit stat report is. And just because it impacts you, it impacts the whole industry. And I just think more and more how important it is that we need to have some more standardization as a whole industry that can really help some of those things.
Well,
Dana?
Fred, going through preparing for this, it's really opened my eyes up to and created a lot of ideas. And one thing I've always done with my staff is because they touch the reports, the loss control reports, as they come back from the vendor or they come back from in-house. But they can start see things in there that they know that I'm worried about, and they'll bring those to my attention, and we can get those over to underwriting. And I've put them all through OSHA 10-hour training so that they understand that part of it, give them kind of an overview when we're talking about the work comp side. But we're getting a new system now, and I'm hoping that within that I can put flags in there that'll flag it really quick so that whoever's in there, if the audit's in there, because we would have noticed it. They don't have to wait for the report and then go back and look for the report. You probably know there's something on that report already. So I think it's going to be education, just training and really more just communication, even just impromptu meetings with folks. I told our audit VP that I think we should go back and set up some lunch and learns within our company just to open people's eyes to this problem. It's much bigger than I think that we realize. And I think sometimes companies will look and wonder, we should be a little bit more profitable than we are. And they might find it just in these little leaks that add up to enough that's taken away from the profitability.
Yeah, and I think those are great steps that you're talking about. And from my perspective, I think of it in terms of like data fluency, the ability for a firm to be literate with the data that they have. But I also think of it as an issue of digestion. I mean, I don't know about your firms, but there's been a great progression in terms of the amount of information that we have and the analytic influence that it can exert. If you know what you're looking at and have the time to actually digest that, there's a mouth and stomach issue there, right?
Right.
And so I think that we really need to pay attention to that as we are getting better at a firm, and I'm sure yours are too, in terms of actually using the insights that we can gain.
Yeah.
I mean, Matt, being data literate, right? Like, that's even with an audit, right? You look at an audit, you're done with the audit. The auditor previews exactly what a summary of exposures look like, and what does that mean, right? So, why do I have 50% clerical and 50% concrete, right? Do you really need that much overhead, or are you assigning some concrete people over into the clerical, or plumbers over into the clerical, right, Fred?
Right.
And I just wanted to go back to Dana's point too on setting business rules, with kind of using that AI. I mean, there's some good prompts you can put in place, especially with classification codes. I would say probably one of the most important things looking at a classification code is definitely the phraseology of the classification code. What does the phraseology say? Because a lot of classification codes in the system says includes clerical, salespeople, drivers, right? So just kind of an example of putting a rule in place like that through, some straight through processing. If anyone has straight through processing, and say, okay, 8832, that's a healthcare code, physician, right? And that code specifically includes clerical. So when you see 8832 and 8810 coming through on the same new business quote or whatever, that should give another prompt that say, okay, are these separate operations or separate entities? And if the answer is no, then it should automatically kick that 8810 out.
Yeah. So that works if you've got it, that information entered correctly, right? For it to work. Kind of set me up for a question here. What roles of any data vendors or vendors work with you in leveraging some of that data? Have you had any experience with that, Jason, that's helped you?
Not necessarily vendors, but I think, one of the things could be
Or data partners or anything
data
like
partners. I would say Matt and I kind of were talking about data scientists, right? So, I mean, data scientists, they're very, very smart people. Like, I've talked to data scientists before where I've had to gracefully ask them to slow down to understand them a little more. But I think of predictive analytics, right? Predictive analytics, and they look at the whole a wide spectrum of things. I mean, they look at the economy, they look at the economy's doing here, they look at the ups and downs of it and what those estimated exposures look like, what they think the final audit exposures would look like based on that, which you can kind of use that to really set up some, when you're issuing a policy and say, okay, in this market at this particular time for this particular industry and this particular business based off of, just a web sweep, it should we're thinking it should be this and not this.
We're going to get into that for a second, but there's something I don't want to forget because I remember in our discussions, Matt, because this is a balance here, making sure we have the right information and that we're underwriting it correctly and all of that. But sometimes business decisions are made that don't always necessarily match up to the audit report. And sometimes that has to happen in order to help secure your book. How do you navigate that?
It's not easy. I mean, so I'd call it case by case. I don't know that I could say any hard and fast rule. You consider the depth of the partnership. You consider the spread of the request and how you feel about all of that. But I think it's something that you need to manage. I think there's some of these instances that are intentional. I mean, I had a $500 policy that went through audit, and it returned $64 million worth of payroll.
Do you want to repeat that?
Yeah, that was the FBI got involved, but it was for real. I mean, so that was. I mean, that's the exception. For the most part, you're talking about people who maybe don't know exactly their risk as well as they should or could for a variety of reasons. And for the most part, we believe that our agents and our partners are trying to give us the best they can in terms of the information. But sometimes it's been misclassed for years, and so all of a sudden you get this risk, and the underwriter's looking at it and saying, "That doesn't look like a restaurant, but it's classed as a restaurant. I think it should be 8017 maybe or whatever." And the agent's like, "Well, it's the premium is this," and so you have to make a choice. Do you perpetuate the problem and then lead to some of the things that we're talking about in terms of unit stat issues and whatnot, or do you draw a line and say, hey, this is what it should be and here's why? That conversation we have routinely, and it doesn't always work successfully. So sometimes you need to make business decisions and ask, okay, is it black and white? Or is this gray? Because some of the operations, that roofing example that Jason gave, that's a black and white example, right? I mean, that's one where you're clearly doing more than you said. But other times they aren't. And I'm telling you, the committee that I sit on, sometimes the rules themselves, we spend a lot of time putting the commas in a certain spot, using the exact word, tweaking it around so it can be interpretable. And we don't always get it perfect.
Yeah, I think it seems that as long as there's humans, we'll have different things. And as long as we have humans that are actually putting the data in that the AI engine is running, there'll be certain things. And what comes to my mind from the master class is there was a list of common leaks or whatever. And out of those leaks, none of them were intentional. I believe people are mean to be honest. as a general rule. And sometimes those leaks are just because it's ignorant or they don't understand.
I would say 99.9. One example that I would give, you asked about the first example of leakage that you can remember. And I remember sitting at a diner in New Jersey 25 years ago. And I was just sitting there by myself having a sandwich. And there was a lady next to me who was clearly the aunt of this maybe 16 or 17-year-old young girl. And the aunt was trying to offer advice to her niece, and she had just been in an auto accident. And so the aunt was like, please just make sure that you have the auto body shop rounded up for your deductible. And I thought, I mean, I get it. I know that happens a lot. I may have even done it. I don't know. I probably haven't. I don't think I've been in an auto accident. I don't want to get blamed. But I know it happens a lot, but it gets baked into the rate then, right? I mean, if it's becoming so systemic, then it's just part of the rate making process.
I think it's the educational piece too, especially like for the policyholders, right? Like one of the first questions if an auditor goes in and meets with a policyholder, I think a good question to ask is, do you know why we're doing this? And most of the time the answer is, well, yeah, you want to make sure we're paying the right premium. Well, yeah, but then you can kind of simplify it and go more into like, well, do you know what your experience modification? No, what's that? I said, well, that can actually give you a debit or credit on your policy. It can either lower your premium or increase your premium. And I said, and also, the class codes you have on your policy, do you have any class codes that have an extraordinary high rate? Yeah, why is that? Well, what we do is we ensure that here we go back to the unit stat, right? Because I want to make sure like unit stats is a big piece of this premium leakage.
If they understand the why, it helps tremendously.
It helps tremendously, and then they try and work to get it right up front.
I've got one last question here as we're running down on time. Goes by quickly when you got people that know what they're talking about. And that's not me, it's these guys. But I want to talk metaphorically here a little bit because we go back to the wildfires in California, the Verisk conference that I referenced 2 weeks ago. They estimated that it's between 30 to 50 billion dollars in loss in just that one area of California, which is enormous. You think about that loss. But here was an interesting statistic, is that 80% of the structures that were combustible were lost. 80% of the buildings that were non-combustible survived and were not lost. So metaphorically speaking, when we look at premium leakage, what areas can be 80% non-combustible, and what are those areas that are 80% non-combustible? Does everyone follow me on that question? Jason? Or?
I mean, sure. I mean, what keeps me up at night would be the 80% that could catch on fire, I suppose.
So what could that be that with premium leakage that we see that could catch on fire?
I think, when you talk about macroeconomic factors, there are things that could start to have an outsized influence. When we went through COVID, for example, we were starting to look at the way that we were interacting with our insureds, and how that could continue to protect the data that we needed to extract out of that transaction. And it was challenged. I'm sure that we all went through it when you weren't going to be able to physically see the workspace, right? And so those types of things, macroeconomic can have broad impact across the entire area. I mean, obviously, I think we all have our class codes that we have concerns with. If you asked me, I would never write a 2501 shirt manufacturer ever. We have a lot of them.
You got a nice shirt. Why wouldn't you?
No, I could go on about but we all have our own biases in that we do or don't like, and so there's certainly some areas that keep me up at night. But historically, I like to believe that the ultimate exposure is embedded into the rate making process, and a roofer is getting, to your point, a much different rate than a clerical, right? Yeah. And that should ultimately be reflective if you're managing the leakage part of it properly.
To close this, Jason, I'm going to lead this into you because when we talked about this combustible, you said something to me about what is non-combustible with like an audit report is 75% technical and 25% data, where it's and the opposite is. So can you we can close on that thought?
Yeah, I would say, especially in today's world, right, and especially with the type of reporting that a lot of businesses have today. For example, Microsoft Excel, right? Microsoft Excel, in my opinion, is probably one of the most powerful business tools for premium audit. A lot of that data, financial records, payroll records, is presented to us in that type of data today, instead of a PDF file where it eliminates data entry. Nobody wants to use data entry. And so when you look at an audit, and to get the risk correctly classified, 75% of your time really should be focused on classifying the risk properly. The other 25% should be working on the data itself, right? And I think to that point, that's a skill that you should have as a premium auditor, is that you're able to move data around fairly quickly to organize it in a way to really analyze it and say, okay, I want to focus on these people. I want to focus on this department. And then that helps you get back to the 75% to make sure, you know what, I'd rather spend 2 hours making sure this audit is classified correctly and only 20, 30 minutes on the data piece of it.
Because it's that technical part that will help it from being...
That truly matters.
Keeps it combustible, right?
Yes.
That's what protects it. Well, thank you for participating with us, and I appreciate all your insight on this. I hope we can give you some insight on different ways that we can plug the leaks as a whole for our industry. So thank you.